Hello, it's Forex News for Friday, December 11th, provided to you by InstaForex News team and me, DEC Fundamental. Trading for interest rate difference with the US dollar as a loan currency will possibly have a continuation, even if the US employment data issued last week makes some market participants speak about the possibility of boosting the interest rates of the Federal Reserve System. For the American currency, the fundamental economic factors hold an essential position, as well as the interest rates difference. Anyway, there are no reasons to think that the dollar's attractiveness as a loan currency will disappear. The investors borrow funds in low-profit dollar, and the American economy performs weaker than other economies. Meantime, the interest rates in Australia are going up. Some Asian central banks start thinking about tightening the monetary policy. Amid this, trading for difference between the interest rates using the greenback can become more attractive. Surprisingly, strong figures of workplaces number in the United States published on Friday together with oversold dollar signs forced the traders to talk about the possibility of longer period when the US dollar will rise in the coming weeks and months. This upward movement will be accompanied by the positions closing open during the trading for interest rate difference. Economic indicators and the difference between the interest rates denote the remaining interest to such trading, keeping in mind that stock markets are normalizing after the volatility boom caused by the events in Dubai and reduce the risk of that currency rates fluctuations will impact the profit negatively gained within the trading for rates difference. The employment statistics should be considered cautiously, taking into account the signals that part-time jobs are still climbing up and the working hours number is lower than desired by the Americans. The signs of weak American economy still take place, especially in the consumer sector, while Asia, Australia and even some European countries are demonstrating faster revival. Although with the end of fiscal stimulation package, the situation with the real demand causes concerns. In 2010, the inflation risk in the USA may affect negatively the dollar cost and the results from the monetary policy stiffening, which can be carried out by the FRS. As before, the Central Bank of America is not going to raise the interest rates now, despite the market is encouraged by employment positive findings. The central banks of other countries are likely to take more decisive position regarding the interest rate advancement. Australia has already begun doing it. Some Asian countries are also keeping the pace. The investors will watch more attentively for which countries will take actions to prevent from the inflation threat the next year, as it can influence on the trading for the interest rate difference. It was Forex News provided to you by InstaForex News team and me, DEC Fundamental. Thank you for watching us and goodbye.